Well, we had some dire warnings this week from the Canada Mortgage Housing Corporation about what could lie ahead for some mortgage holders and, of course, by extension, for the whole Canadian economy. Benjamin Tal, Deputy Chief Economist at CIBC Capital Markets, is with us now. And Benny, I want to first check in with your reaction to what you heard, whether it sounds like reasonable fear based on what you know about this market.
Yes, it was a very extreme statement coming from the head of CMHC, basically telling you that prices can go down up to 18%. That was the headline. Of course, he said if the economy does not recover sufficiently, which is a very, very broad statement. What does sufficiently mean? So there are no assumptions here about GDP, unemployment. So I have a feeling that he's talking about basically the worst case scenario, what can happen if we don't improve. And I can understand that. Also, clearly there is an agenda here because he would like to see the minimum down payment rising from 5% to 10%. So clearly this is consistent with this kind of agenda. So overall, I totally understand where he's coming from, but I think that the numbers will not be as bad as perceived.
And you've pulled together some information. I want to walk through some of it because it does paint an interesting picture of what's happening out there, including we're starting to get a read, right, on the number of rents that are being deferred and the number of mortgage deferrals. Let's look at mortgage deferrals. Just in terms of who's doing it, to me, it wasn't super surprising, Benny, in terms of the age group, income group. Like nothing in here jumped out to say, oh, that's a shock. It's younger people who don't earn as much, it seems to me. So what does it tell us about what we should expect when it comes to deferrals?
Yes, that's the key question. Yes, so we're talking about 15% of mortgage holders decided to defer. And, you know, we're trying to get into their head and say, why are you deferring? Do you have to? Do you want to? It's nice to have. You know, why are you doing so? Because eventually you will have to pay that, and you pay interest on interest, as we know. So why are you doing it? Are you totally desperate? And my sense is that some people did it just because of the fact that they wanted a break. They weren't sure that their job's still there, but they were not sure. So they were saying, okay, let's defer for 6 months and see what happens. So why is it so important to understand what's happening here? Because when this deferral is not available anymore, like 4 or 5 months from now, how many of them will not be able to pay? Clearly, the default rate, the delinquency rate will rise, but it will not be a huge number as 15%, of course.
I mean, obviously, the banks are making decisions about this, right? You can't just defer your mortgage because you feel like it. Some institution on the other side has to agree to it. I don't know how much prudence is going into that thought process. But Ben, hit on, I think, what may be the most important question, which is the jobs picture. Because we can all manage our debts, you know, to whatever extent we can manage them if we have income. It's when we lose income that things go topsy-turvy. What's your expectation about job losses as you look ahead?
Yes, and that's the key question. Of course, what we are seeing now is the extreme. We lost 3 million jobs. We know that we will regain many of those jobs. Obviously, what we are seeing now is a temporary job loss that will be regained. But as I suggested in our previous conversation, when we recover, it will be a recessionary recovery, and the unemployment rate will be about 8%, down from 13%, but higher than the 5.5% that we have seen in the past, which means that we will have to deal with it like a normal recession. And usually in a normal recession, the delinquency rate is rising from 0.2 to 0.5, 0.6%. That's what I'm expecting. It will double. That's what we have seen in 2008. But, you know, talking about 20% delinquency rate, I don't think it's the right thing to looking at the situation.
One of the big concerns that has been raised here is that we see the delinquency rate going up. Because we see house values coming down. In other words, that kind of perfect storm in a real estate recession, which we saw in the 1990s, where people own mortgages that are bigger than the value of their house, and they wind up having to walk away from an asset because there's just no way to get out of that. Are you worried about that, or do you think that is a less serious problem?
Well, I think that house prices will go down, but it's very interesting to look at the composition of the decline in house prices. We are seeing more of a pressure on more expensive houses, less of a pressure on less expensive houses. We see it in the condo space, we see it elsewhere. So all the decline in house prices that we have seen now was a compositional shift, basically more demand for cheaper properties, and therefore the overall price goes down. But if you compare apples to apples, basically the same house, actually prices are rising, not falling. So I think that will be a factor here. Definitely more people will be buying cheaper houses, and therefore the average price will go down. I'm not buying the story of we are going to collapse here. If you look at the fundamentals of the housing market as we recover into 2021, 2022, I think that we will be fine. Yes, prices can go down by 5-10%, but if you look at 2022, 2023, I think that the trajectory that we have seen in 2019 will continue.
We only have about 30 seconds here, Benny, but when we look at the renters seeking relief, we're also seeing it concentrated in the provinces that are the hardest hit. No surprise. Do you expect these numbers to go up in the months ahead?
Yes, it was very interesting. In April, we were waiting for those numbers, and everybody said it will be terrible. We got 90% payment rate, 90%. May, people say it will be terrible, 90%. So people are paying. And it's very interesting that people who pay are actually lower income Canadians. Why? Because they have to. They have to because they are locked into rent control type property. They need to do so. So that was a surprising result of this survey.
Benjamin Tal, always great to have your thoughts. Appreciate it. Have a great weekend, Benny. That is Benjamin Tal, Deputy Chief Economist at CIBC Capital Markets.